Every first-time buyer I talk to asks me the same question. Myles, should I buy right now? And I'll tell you exactly what I tell them. Most of them are asking the wrong question entirely, and that mistake could potentially cost them tens of thousands of dollars before they even move in. In the next couple of minutes, I'm going to show you the math that no real estate agent, no banker, and no mortgage calculator on the internet at this time is going to show you. Stick around, because if you're thinking about buying your first home in Canada in 2026, this might be the most important couple of minutes you spend today. Here's what I'm going to be covering. First, the real cost of buying a home right now that nobody puts on a spreadsheet. Second, the math that actually tells you whether you can afford to buy, not just whether the bank says you can. And third, 3 questions you need to answer before you sign anything. So let's get into it. Here's the trap. Every first-time buyer focuses on one number, the purchase price. Maybe the monthly payment too. That's about it. And I get it, those are big, scary numbers, but there's a whole second list of costs that nobody really tells you about until you're sitting at the lawyer's office and it's too late. Things like land transfer tax, legal fees, home inspections, title insurance, moving costs, adjustments at closing. We're talking anywhere from $10,000 to $30,000 in cash on top of your down payment that you need to have in your account for closing day. $10,000 to $30,000 on top of your down payment. Does your affordability calculator show you that? I'm willing to bet it doesn't. This is what I call the invisible price tag, and it catches first-time homebuyers off guard more than you might think. Hence why at our office, we build out a fully dedicated closing cost worksheet so you know those exact numbers. It's very important to understand those because you don't want to be surprised at the lawyer's office and then begging mom and dad to lend you an extra 10, 15, or 20 grand for closing costs that you didn't really talk about with the person arranging your mortgage or real estate transaction. Now, here's where it gets interesting, because the question isn't just, can I afford to buy? The question is, what does buying actually cost me every single month? And I'm talking about all in. And then you want to compare that versus renting. And when you run the math, honestly, sometimes the answer surprises you. Let's say you're looking at a $550,000 condo in a mid-sized Canadian city. You put 10% down, that's going to be about $55,000. Your mortgage payment at today's rate is going to be around $2,800 a month. But add in things like condo fees, property taxes, maintenance. You're sitting closer to $3,400 to $3,700 a month every single month. Now, compare that to renting a comparable unit. Let's say $2,400 a month. That's a gap of around $1,000 a month or $12,000 a year. That's real money. Now, I'm not saying don't buy. I'm saying know your numbers first. Because the goal isn't just to buy a home, the goal is to build wealth. And sometimes those things are the exact same, and sometimes they're not. So when does buying win? Well, when you plan to stay long enough for your equity to grow and outrun the monthly gap. In most Canadian markets right now, that's a minimum of 3 to 5 years, sometimes longer, depending on where prices sit today and depending on what city you live in. Now, a quick pause here. If this is hitting close to home, hit that subscribe button. I put videos like this out every single week trying to break this stuff down. The math that the industry doesn't necessarily show you up front. Okay, let's get back into this. So here's the escape. 3 questions you have to be honest about and honestly answer before you buy anything. Question 1, do you have a 5-year plan for this property? Not hopes, not guesses, a real tangible plan. Because if there's a chance that you're moving before 3 years for either a job, a relationship, a growing family, you might not break even and you might lose tangible potential wealth. The math doesn't lie in these scenarios. It's important to understand and know that information. Question number 2, have you stress tested your payment? Not at today's rate. At today's rate plus around 2%, or in some cases even more. Because over the last couple of years, we've seen rates jump up pretty dramatically. We've seen the cost of living go up dramatically. And of course, on top of all of that, life happens. Job changes, growing families, all these different things. Can you still make your payment if things get harder? That's the true question behind stress testing your entire mortgage payment. If the answer is no, I hate to say it, but you're not ready. And that's okay. That's information, and understanding that information can help you make very, very good, educated, important decisions so that you don't end up, shooting yourself in the foot. We want to make sure we're ready for these sort of transactions. Buying a house is not a small thing. It's probably the biggest debt you're ever going to take on. You want to make sure you're ready for it. And question number 3, and this is one that I don't really see people talk about on mortgage or real estate channels, and I think they should. What's your opportunity cost? That $55,000 down payment sitting on your home could have been sitting in an investment, and that extra $12,000 a year that you pay less because you're renting, well, that could be added to that investment too. You want to run these numbers and compare them and then decide from there. It might make more sense to stay in your property that you're renting and invest versus buying and building equity. Once again, this is all based on planning. Now, if you want to run those numbers, I built some free online calculators. I don't want your information. I don't want your email address. Just use them. They're free. It's not to collect data. It's simply so you can run these numbers and understand them. I'll make sure to put a link for that down in the link below. I'm also going to include a link to another calculator that's designed to compare all those additional costs we were talking about so that when you look at buying a house, you know how much of your annual income it's going to chew up every single month. Now, keep in mind the numbers that it's showing are not based on qualifying numbers. So when it says you're spending 50% of your income, you may still qualify for that mortgage. It's showing the total cost of owning that house. These are two very, very crucial things that you need to understand if you're looking to get into real estate. Once again, they're down in the description below. They're free. It's there for you to use. Please use it. Here's the bottom line. Buying a home in Canada in 2026 can absolutely be the right move for you. The markets have softened. Prices have gone down in some cities. And we're in a situation where you can add in subject to financing and all these different things. Yes, interest rates are a little bit higher, but you can renegotiate your mortgage rate every 3 to 5, maybe 10 years, depending on the term you take. You can never renegotiate that purchase price. So if the math works for you and not against you, yeah, this could be an excellent time for you to buy a house and jump off the fence. But make sure if you're looking at that, stop asking the question, should I buy? And start asking the question, does the math make sense for my life, my timeline, and my goals? If you want to run through your specific numbers, your income, your city, your situation, there's a link in the description where you can book a time with me and my team to run those very numbers for your situation. And if you want to see a video I made about why nobody's buying or selling in Canada right now, I'll put a link for that right over here. Watch that next. It's kind of giving you a full picture of where the market's actually sitting right now. My name's Myles Nowik, owner of the Nowik Mortgage Team, powered by Indy Mortgage. Thanks so much for tuning in. We'll catch you on the next one.